Hi guys, it's Zhang again with Moolahwise.com, and today's video will be explaining the difference between permanent and temporary life insurance, also known as term life insurance. I'll be explaining the main difference between perm versus term life insurance. Then I'll explain the difference between the level terms, and then next I'll be explaining the other popular term life insurance, and finally we'll show you the pros and cons of owning a term life insurance. So let's get into it. So as you can see, the main difference is that the main difference between permanent and term life insurance is that term is just basically cost of insurance, right? While permanent is cost of insurance plus cash value. And think of term similarly to renting, while permanent is owning your life insurance. In a term insurance, when the term ends, then the protection ends too. Term life insurance is similar to car insurance. If you don't use it, you lose it. Simply what that means, if you don't die within that term, then all the premium you paid goes to the insurance company. But there's also different types of terms that we could talk about too. At the end of your term, when the term expires, at the end of your term, people can either convert to a permanent life insurance, of course, if they qualify with their health and their age, or try to buy another term life insurance. But please note that the cost of insurance will go up, and or they might not qualify for more protection since they will have age and their health is worse since starting their original term life insurance program. So what are the different types of term life insurance? Okay, so the first one, this is what we call level term. In the level term, you can buy 1 year where every single year it renews at the end of the year, or you could buy a 5-year term depicted by this graph where if you own the policy starting at age 20, at age 25 it goes up, at age 30 it goes up, at age 35 it goes up. Basically every 5 years that you own the program, it goes up. And then over here is the 10-year level. Okay, so what that means is that if you started the program at age 20, then age 30 it will go up, and then at age 40 and so on for every 10 years. Next is the next level term we have is 20 years and 30 years, but I didn't draw this graph because it's basically the same concept, but instead of going up every 5 and 10 years, it goes up every 20 and 30 years respectively. And again, at the end of your term policy, you must ask yourself if your term is even renewable, because some terms are not renewable due to their health reasons. Next, after the level term, there's also another type of term life insurance, that we'll talk about briefly, which is the first one is called the return of premium term, which just means that if you don't die within that term, this type of term life insurance you can get all your premium back if you don't die within those terms. But keep in mind that this type of term insurance may be more expensive than your standard term insurance and may have some tax implications. So please talk to a licensed professional and understand what you're buying before you own it. The next type we want to talk about is what we call group term. And in this term life insurance, it comes through from your employer, and the term's cost of insurance is based on the average age of the group, or the average age of the group. Also, the death benefit is based on what the company deems necessary and not actually what your family will need. Since this is a group term policy, then you will lose the protection when you stop working at the company. So keep that in mind, guys. Group term, you may not be paying that much for it, but at the same time, you may not also be getting that much protection. So if you currently working in a company, check to see if you have what we call group term, and check what the terms are. Check out how much you get if you die, what kind of death benefit you get if you die, and what are the terms to getting that death benefit. So I just wanted to point that out. And then last is just the pro and con of owning a term life insurance. So first, let's start with the pros of owning a term life insurance. In a term life insurance, you can have a lot of coverage for very little money. It's also easy to buy. This type of protection is good for people that have high risk jobs like firefighters, policemen, and etc. And why is this important? This may be because this is important because they may not be doing that profession for the rest of their life, and this just basically protects them while they're doing that high risk job. Also, term life insurance is also good for families that are just starting out and have a lot of responsibility and may not have much money to protect their family during their highest earning years. And next, let's talk about the downside of owning a term life insurance. First, there's no cash value, and simply, if there's no cash value, then a consumer or a client cannot get what we call free life insurance. And when I mean free life insurance, I'm just referring to that the interest on your cash value is higher than the cost of your insurance for that year. So technically you got it for free, but in a sense you're not getting it for free because you are still paying monthly amounts or premiums. But you'll get to a point in your life insurance, if you have cash value, that the interest you're gaining on your cash value will be higher than the cost of insurance that you're paying the insurance company that year. Another downside is that you may not qualify for more protection once the term ends, right? And like I mentioned, another downside is that you use it or lose it, similar to like home insurance, similar to car insurance. If you don't use it, you lose it. Meaning if you don't die within those terms, then you don't the protection, you don't get anything back. And I did mention about the return on premium, but that is a little bit more pricier because you are paying for a awesome feature, but you just have to talk to a licensed professional to find out what is suitable and affordable and will fit your financial needs. And last, the last downside of a term life insurance is that it may not have living benefits since there's no cash value, because most of the time we see the living benefits or the accelerated death benefit tied to the cash value as well as also the death benefit. But in a lot of term life insurance, there may not be living benefits. I can only think of one life insurance company that offers living benefits in their term, which is the Transamerica LB, or the living benefits. So I just wanted to point that out. Again, guys, we are licensed and appointed agents with Transamerica, so that's why I know that. But the broker dealer we work with also work with companies like Nationwide, Transamerica, Prudential, Pacific Life, and those term from those insurance companies don't offer a living benefit except for the Transamerica that I mentioned. So that's the end of my presentation, and I just hope that you guys can understand the difference between permanent and term life insurances. And again, I just want to remind everyone of our mission that we want to educate 1 million families on the importance of owning life insurance. If you have any questions, please reach out to me at info@moolahwise.com or learn more at moolahwise.com. Thanks for listening. Bye.